Deja vu all over again, folks. We had a down open yesterday, but the Bulls came back and took out Friday's high, but we're fading once again. Will we have that same scenario on this low volume Friday? Got to talk quantum stocks because they're making quantum moves. Special guest today, 8:35. Got to bring out the bull, Ryan Dietrich from the Carson Group. Triple D are going to try and go toe to toe with them, but that's going to be hard. Ryan, Statman Do knows his stuff. So we're going to look for some stocks from you guys. We're going to get the show started on this Friday. It's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, traders and investors. Like I said, we're right where we were yesterday morning. We were hanging in there till the close. Sellers came in on the close, and that weakness has continued overnight. Not looking for any major follow through on the downside unless we breach Thursday's low. That's down about another 7 handles. Good buck, bad buck. That's going to be a debate. We'll talk about that with Ryan Dietrich. Down 15 cents up at the high of the move. TLT, I guess, it just doesn't worry anybody. We're down 52 cents at 87.30. Up. USO back up that pesky $74 level, up 84 cents, 73.97. Gold and silver, both negative on the sessions. GLD by 52 cents, 242.55. Silver ETF hanging right at 27, and Bitcoin consolidation station here in the mid 90,000 handle. We find the Bitcoin futures this morning up $970 at 97,445. Let me remove my charts, and Triple D is raring to go.
Yeah.
Triple D. Here, we're right where we were yesterday morning. Is it time just to do what same thing again? Just buy off the open?
It's certain stocks. It's the retail names, the stocks that are talked in social media. And we predicted this Santa Claus rally. It's usually the retail darlings that are really the stocks getting bought here. And you're seeing it. Obviously, maybe kickstarted with the Roaring Kitty and the GameStop tweet over I guess not the weekend, but on Christmas Day. And, that retail, lots of little stocks, the quantum stocks moving. Everything that's really talked about in chat rooms, those are the stocks that are really getting lifts, and then smaller stuff like, look at Big Bear AI, blasting off the last couple of days. We're at this point where it's starting to, bubble over into a lot of little stuff as well. And again, the ducks are just lining up so nicely for the January rug pull. Does it happen on the first day? Does it happen on the second day? Does it happen the day before? I don't know. But I'm at this point where I think if you're coming in, I think you got maybe a day or two here, but I think there's going to be a rug pull, and I think it's going to be violent. But treading water is probably a good name for the show because, we're trying to go higher. The indices, S&P's flying back. They're like, yep, Santa Claus, here we go. Certain stocks are blasting off. Sound Hound, another one blasting off, the last couple of days. But again, it just feels like there's something that's gonna, it feels like there's an inevitable rug pull happening here. And again, I think it's going to be the first week of January.
It's funny because one thing that we frequently talk about is like rotation, right? Rotation stocks. Did Little Kitty, Roaring Kitty, did it ever follow up on that tweet? Or
I don't think so. He just tweets a picture of a president, the stock blasts off 7%. The power that guy's got, I've said it before, it's like he's like the most powerful guy on Wall Street here. Really is. Like, to be able to move a stock with just a picture is unbelievable. No, that's I just went to his
okay, because it's funny because there's rotation in these stocks, because when you were talking about that yesterday, I'm like, okay, I'm gonna go see what Dennis is talking about. And I went AMC. And I'm like, AMC.
That never got any love.
It never got him up. And I'm like, Beyond Meat. And I go BYND. Do you see
a little bit of love?
Look at that.
A little bit kick-started yesterday. Is that an after hours print? That must have been some bad print or something from last night.
Let me
Just
see
looking at
here.
that 420, I never saw that.
Yeah,
But they
421.
started to move. I mean, okay, exercise here time. And again, with some smaller names, I pointed out the BBAI, but I always go to that highshortinterest.com because it's people that go to that one. And, what's on that? Stuff starting to move. Beyond Me, it's like number 6 on that. I don't know a lot of these smaller companies. PHAT, Fathom Pharmaceuticals on there. It popped up a little bit yesterday. This is like the short squeeze site. RILY is B. Riley, which has had all kinds of issues. We know that. We talked about that stock. MPW is number 3. I have no idea what that is. Medical
Is it
property.
Manitowoc? No, it's Medical Properties Trust. You know what has really been the short squeeze darling though?
What?
Rumble.
Oh, yeah, I know. It hasn't even stopped. You just
Yeah.
got on those headlines. Like when they break, and who was it again? It was Donald Trump Jr.? Was it Donald Trump Jr. on the board?
No, what was
Who
that
was it?
company?
Who was on the board? Oh, no, it was Tether. It was the Tether.
Tether. Yeah.
Was the chat? Which one was the one that Donald Trump Jr. went on the board? And that one thing blasted off too. Which one was that one? I've already forgotten. Well, that's the chat. Was it UMAC? It was UMAC.
Yeah.
Wow. And it's moving up here too. You just gotta have a list. And these are the stocks when GameStop starts kicking off, they start grabbing all these social media darlings. What's chat? Okay, throw it to the chat. What's your social media stock? What's the ones that PSQH Spinner's given us? What's the ones that haven't really SoundHound's been going? There's so many of these little things. I was BBAI. I had Fuzzy Panda. Fuzzy Panda. The QS. They're saying QSI. There's another one.
Yeah, I don't even know these. You're saying these symbols so fast, and I'm like, I don't know what the hell these are. PSQH?
Yeah, I don't know that one either. But I had a little move yesterday. But look at the QSI, Joel. Quantum SI. I don't know anything about this company. I don't know if anybody does, but they do now. $1.26 yesterday, blast off to 215, 358. Anything with quantum in it now. Biggest move, one of the biggest movers today, QMCO, Quantum Corp. Anything that's got the name quantum. I mean, we are just, now at a point where you got to name quantum. That's the new buzzword right now, quantum. Anything that's QTUM they're giving us, that one definitely. Oh, that's the ETF, Defiance Quantum ETF.
Yeah, just go broad with the ETF.
A QUBT, we've talked about. Christian's talked about that one on the show. QBTS, we've talked about. That one's blasting off to new highs after the pullback. QMCO, we just talked about too. Holy man, these things move. Again, these are tradable. I don't think I'm coming in and investing in these things. So these are like hot potatoes. And there will be a rug pull, inevitable rug pull somewhere. But they're fun to trade. And you're in Santa Claus week. We got 3 more days, including today, 27, 30, and 31. So I still think, there's a little bit more oomph in some of these names. But eventually, don't get caught holding the bag. That's all I'm saying. When they pull, they're going to pull fast. So just be careful if you're trading these names. Even Lunar. I still have a little position in Lunar. I looked at it yesterday. I'm like, $19. I mean, this thing was like $12 2 days ago, or maybe it was a little bit longer. That's 4 days ago. 19. I mean, anything that's got a little bit of a cool story, that's what they're buying here right now. And if you've got value, you're a value stock, and you're sitting there. Oh, yeah, they don't. But a little bit yesterday, some of them went up, but they have just been left for dead, a lot of these value stocks. We know like Ford, or, we've talked about, my new core, which has just been an epic disaster. But there's just a lot of names. So Joel, I'll pose you the question here.
Wait. Before you do that, does OpenAI planning to go to a for-profit company? Does that change anything out there?
Is that news today?
Yeah, I'm just seeing that right now.
I don't know. Chat might be able to aren't they all somehow for profit anyway? So OpenAI is supposed to be free, but it's like now it's going to go for profit. I did not see that headline.
Okay, I just saw it on CNBC.
No, well, CNBC could be news from 10 days ago. That's old news, they say in the chat. Joel, stop watching CNBC. We don't watch CNBC.
Well, I have something.
It's old news. You were telling me about, CNBC saw it on this morning. He's like, what's this note on JP Morgan and Apple? I was like, I don't think there is one. He's like, well, CNBC's got it behind their paywall. This could be from a week ago. That's what CNBC, okay. Their breaking news is usually 10 hours old.
I put Bloomberg on. Okay, you happy now?
No, we watch ourselves. We watch ourselves.
Don't start arguing with me today. It's just me and you today. We don't have Christian to moderate. We don't have Aaron to moderate. So
We do have a resident bull coming in though here, Ryan Dietrich, later on today. So he's going to help us out to get us off this bear train. Because I want to get on the bear train. I keep stopping myself and say, cool your engines. You got a few days. You got to cool your engines. But I want to get bearish that first week of January. I'm probably going to. Has Oxy bottomed? I don't know. These stocks are just all hated. So, Warren Buffett obviously turned it around with his purchase there a few days ago. It's trading up. I was trading up a little bit. It's up at nickel here today. I was trading up the last couple of days on Warren. Maybe comes and buys some more again. I don't know if he bought more overnight here. I didn't look. But, when he starts buying again, he probably buys a bit more, and that might, put a temporary floor under it. But, just look at ExxonMobil, best of breed. And I mean, you're down for the month of, in 1 month, you went from 122 to 106, and one of the best stocks. And oil in that time period is basically flat. That's what's incredible here, is the separation between XLE and oil itself. Because oil really hasn't went down, but the oil stocks are going down. And that's because they're raising money to buy all the story stocks. They're raising money to move it into tech. They hate, companies that are just printing presses like ExxonMobil. I think that turns. I think it changes. Do I want to buy ExxonMobil in the long-term portfolio? Part of me, but, it's been tough money. They just haven't been great investments. So, and even if we get the January pullback here, does that mean, it's the value year? When the hell have we had a value year in the last decade, where value stocks are just the best thing ever since sliced bread, and they're just blasting off, and small caps are outperforming? Not that they're even value, because half those don't make money. But I mean, it's tough to just come in and say it's going to be over for technology. I think we get a January rug pull, but then you think you're probably going to find, even if we get a few days of weakness where I think, you could see some stocks fall 10%, I think it's going to be great trading opportunities. The dip's probably coming to get bought again.
We haven't talked about Kathy in a while.
She's had a couple of rough days, and she's bouncing back again. Tesla's, or ARKK and Tesla on the same chart. They look a lot the same. And then there's just a lot of stocks in there, that she's actually had a really good year. So we said we'd bring her back on the show. She's back in favor. I mean, ARK started the year around $45, $60. So it's been a pretty good year for Kathy. She's up 30% probably this year. So it's been a pretty good year for Kathy. A lot of those darlings, have come back, the Kathy darlings. But, that's been the story. That's story stocks. And if you don't have a story, valuation is not a story. They don't care. Write that down. Valuation is not a story. The market wants a story. They don't care about valuation. They don't care about making money. This new investor, this young buck, they invest in crypto. None of that makes money. I mean, you got a whole industry of crypto traders where none of those companies make money. Maybe there's a few that somehow make money, but I mean, Bitcoin doesn't make money. There's no money. There's no business. There's no anything. It's just nothingness, but it doesn't matter because there's more people coming that want the nothingness. So, I mean, that's where we're at. Crypto really summarizes the new investor. They don't care about making money. They want a cool story. Crypto's full of cool stories. That's why it goes higher. So that's where we're at. You've got to adjust your investing. If you're sitting, punching balance sheets and looking through and figuring out future cash flow statements and doing all that stuff, you're getting left in the dust.
Do you think maybe they should just stop teaching valuations in the CFA course, and maybe just take that page out of the book and just rip it out there?
Story stocks.
What about tax? You're in tax selling, something like but it's weird because like Nucor, you had a nice profit in it earlier, man. That thing got over $200. So you're in the green. So that's red on that. That's substantially red on the year. Let's just look. ExxonMobil. That is still up on the year, but Schlumberger. Nah, what's that? That's down for the year.
They don't like those stocks. If anything trades under a PE of 10, they hate it. What's the Schlumberger PE? We're talking Schlumberger, but me and Joel always call it Schlumberger. Schlumberger PE is probably 11 or 10 or something like that. It's 10. Oh, man, I just guessed that. 10. They hate PEs of 10. They hate companies that make a lot of money. There's no story there. That's the anti-EV story. Yeah, they hate that. Maybe it turns around eventually and we go into a value market and we will see violent rotation. If they pull the rug out from all the story growth stocks, you could see that value rally. That value rally could happen in January. I think it maybe does. I think it might be a matter of, like you start seeing, the darlings, the retail darlings really take a stumble. Probably goes into the value names because it probably doesn't come out of the market because nobody's that scared to just sell stocks altogether. I don't know what that's going to take. Because we haven't seen this, all around sell off in years, it seems like, really since COVID. That was the last time we saw, stocks just getting sold across the board. You just don't see it anymore. Maybe eventually, but then it's algorithmic too. Talking with my buddy Jeff yesterday. He's like, are all the algorithms just programmed the exact same way? And my short answer was like, yes. Yeah, you're right. You got all of them are trading momentum strategies. All of them are trading off stories and headlines. None of them care about valuation. They're all Momo. So I'm like, you're right. Obviously you have Citadel, Virtue, market making algos, but we're not talking those ones. We're talking like, the algorithms that are out there that are trading headlines and story and, news and information arbitrage and all that. They're all programmed the same way. So does it all end like ugly one day? Maybe. But right now, the party continues.
Yeah, we're just we're holding steady here this morning. We don't have any earnings really to talk about, but taking the opposite end of stuff, Dennis. I mean, Apple. Look at that Apple chart here. Unbelievable. Dan Ives pounding the table on it. I guess no matter what happens, people are going to be buying new iPhones. Look at that move
I bought
since.
one. Look,
Yep.
new one. iPhone 16 Pro. I upgraded. You know why? Because I had the mini, the 12 mini, and my eyesight was getting so bad I couldn't see it anymore. I had to get the big phone. I'm like, you're getting old when you got to get the big phone. That's the only reason I upgraded. But the upgrade cycle continues. The cash cow of Apple continues. But the story is still here. And that's what they want is a cool story. Dan Ives even driving the story here. AI intelligence, they're going to be the cornerstone. All this. There's still a story here. So, valuation stretched like hell, and it scares the hell out of me at 38 times. But we know when the story's hot, valuation doesn't matter. The Apple story still remains hot. I don't know when it cools off, but story is still here.
Well, you can change the font on your phone, Dennis.
I did that too. I brought that up too, and still, that's how bad it was. Because I don't like wearing so I take the glasses off, and then distance is awesome. I can drive, I can see gray, distance. But when I get up close, I was like, I need the glasses. Well, a lot of times we'll walk around the house. I don't have the glasses with me, so I just want it there. But anyways, yeah, I did increase the font size, but it's still just nice to have a bigger phone, to be honest. The mini it's small.
Okay. All right. As we hold steady here on this Friday morning, Ryan Dietrich coming up at 8:35. Should we run through the charts real quick on these?
Yeah, let's do it. You know what?
Wow.
We haven't done this exercise in a while. Let's run through the top 10 components.
Okay.
Let's run through it. S&P top 10 components, and you just started with the biggest one. We just did Apple. So Apple we've already done. So we did the first one. So we have 1 out of 10 done. Let's go, and I'm going to go to, what's number 2? It's like they move around a little bit. So
I do. Yeah.
You have it in front of you?
This is my lay. Yeah, of course, man. That's my main screen.
NVIDIA is number 2.
Yeah. NVIDIA, and I said this earlier in the week. I love these this is like the you guys know I'm not fancy with my technical analysis, but these are just great moves. This was your earnings day high. We had the low when the market sell off. Your 50% here is
this exercise. Let's blow up that chart for all of them because we don't care about the day trading chart on the left right now. We're doing like a longer term exercise here. So the top right chart, blow that one up.
Okay, that's the day. Okay, yes, sir.
That's the best one. When you're doing a long term swing trade, bring up the day. Look at that, the daily. For your last 3, 4, or 5 months, kind of get a feel for what the stock has done. So blow it up, even blow it up the whole screen, pull it to the left. We're into the whole screen.
Wow, Dennis, woo!
I've always wanted just one chart, but I only use one chart in my analysis. But there you go. Okay, so the NVIDIA story obviously has been bullish. We participated in this tremendously. It was one of my best stocks this year. Definitely helped my long-term portfolio. I've sold a lot of it. I haven't sold it all, but I sold a lot of it. Why? Because valuation, is stretched here. And then you just think about competition coming and everything. Do I think the NVIDIA story is over? No, I don't think the story is over. Do I think, that it's going to have as good of a year as in 2024 as it did? No. I don't think 2025 is going to be
Oh,
nice. I don't think
Dennis, it
2025
started
is
the
going to
year
be as
out
good for anyone.
under $50.
Yeah, I know.
There's
We
okay.
know. We were cheerleaders on this stock. There's no doubt. I was long this stock. People hated it. Some people loved it. But the reason, again, was man, I'm getting old. I start forgetting. Okay. Anyway, I'm gonna leave it. But Dan Ives is a big reason too. But he's
No,
done a
you
little
you
bit of
were you
everything.
were just saying that you
Dan
thought
Niles.
the big
Dan
argument
Niles.
was the
Dan
PE.
Niles, who's one of my favorites. He was
Yes,
on
Dan.
CNBC in December, November. It was in November of 2023, and said Nvidia is the biggest no-brainer out there. It's trading 24 times forward earnings. Everybody's like, "What are you talking? It's 150 times earnings." It's like, no, it's not. They're going to be growing earnings here, and he was so right. And that's when I took the position in Nvidia. I bought it 3 times. I bought it at 400, at 500, and 600. 40, 50, and 60. And when I bought it at 600, people said, "Are you nuts?" That was when it was 60. Now it's 139. So I've been light. I unloaded most of it in the 130s, but I think I still probably have a quarter of the position at least. So I still have a good chunk of it. But at this point in time, I just don't think it's going up another, I don't think it's going to $8 trillion this year, like doubling. I don't think it's happening.
Just simple technical setup, then we'll move on. I mean, you need to establish a 140 bid here. It's been it's been in the trading range for the most part between 130 and 150 since October. That's a long time. So, I mean, if you want to go a little bit longer term, I'd say, bull's still in major firm control until you break was 130. And, if you want a major breakout, you're thinking this thing's going to 200. You're going to have to get up over 150 again and not completely fall out of bed. Definitely a laggard here. Microsoft, look at that. I mean, it's just been a wonky pattern here all the way since August, considerably off its all-time high. Boy, I tell you,
Tired.
tired. It's like it's making higher highs, and then man, this is a tough one, man. This is
So Nvidia and Microsoft both are a little bit tired. They've had good moves. They're a little bit tired. It's kind of like a lot of other stocks. Maybe going to end up being a little bit tired. So I'll just say tired. So I got Apple making new highs, breaking out 38 times. Valuation scary, but it's going. So you can't argue with it. Apple looks great, at least from a technical perspective. Nvidia and Microsoft a little bit tired. Next. Amazon. Love Amazon. Love it here. Cheapest the stock has been in a very long time. They've grown earnings for, and it's a huge position in both my wife's and my own portfolio. So I love it. I was going to buy more at 200. I wish I would. It's 225. I put it on my shopping list. And if it goes back, if it gets a tech rug pull, and this thing gets anywhere back near the 200, I'm going to buy more. So love it. Goog is an interesting story, Joel, because the chart looks pretty good. The valuation's very attractive. They're trying to figure stuff out, but then you worry about, search, one of their core businesses and it being under attack from the AI chatbots. That was the concern earlier in the year, why it lagged so much.
There's always
But it's bounced
concern.
back.
There's always
There's always a concern.
there's always antitrust and
Yeah.
there's always something going on with them, and all it does is shrug off the news. I mean, just think about what, and if you want to do a little financial engineering here, they spin off YouTube or something like that and drive everyone absolutely crazy. But that snuck over $200. That chart, along with Apple and Amazon, Google, the big boys, right? They're not really looking like they're showing any weakness. We don't talk about Meta much anymore, but Meta, I mean, that's we got a good setup here for Meta, a little bit different than the watch out, Dennis. We're coming up on we're making new lows on the session here.
That's all right. I don't have hardly anything on because I had huge Christmas party here yesterday. 75 people at my house, so it was pretty intense. So I didn't do a lot of trading.
Okay. The Facebook, as I still like to call it, this is interesting. I mean, you had the big rally, it gave back a little bit, half of the move, but I mean, still stays over this bid here. It looks like you go up to new all-time highs for that one. I did the Googs. I combined the Googs. I just
Yeah, for
can't,
sure.
Yep. And then for the rest of the show, we'll talk about this stock.
Is it number 6?
Yeah.
It's moved up to number 6.
Yeah. Oh, yeah.
We won't talk about it continuous. And again, I think there's going to be a rug pull in Tesla. I think we're going to get it cheaper. I've said yesterday, I said a 465. I said if I had this on for a trade, I'd sell it. I'm up 15 points on that from this time yesterday if I was paper trading it, because I think the Tesla high, again, is in for a little bit. I think it just got overdone. I think it needs a cooling period. Do I think the story is over? Do I think Tesla's over? No, I think the story is going to be awesome. I think 2025, it can go a lot higher. I think it needs to cool off a bit. I want to get back in the 300s. Maybe you get down to like 375, and then you buy more. So I still think the story is awesome here. I've hardly sold any. I said I sold about maybe 10% of the overall position because I don't want to miss it too. But I want to add to it. I actually want it to go down. I kind of want to add to it because I think the story here is going to be the story for the next few years. I think it's the story stock for the next few years. But the valuation's crazy. Like if you're just taking from the numbers. So there's lots of, I get the bear thesis too here. I understand it. So we've talked Tesla a lot. So next.
Well, no, I look at the stars I put here at 415. See the 4 lows.
Level.
Yeah, and that's $35 away. I mean, what could go wrong? I mean, so I'd look at it. It already took back half of the move. I would just, if you're looking for more in Tesla, the high of this great move has been the closing high has been 479.86. So call it 480. That's the all-time closing high too. Let's move to the dog, Berkshire. But man, that chart's looking okay.
I think it's Broadcom now, Joel. It's Broadcom actually.
Broadcom went above it. Okay.
Broadcom has moved up ahead, just past Burke there recently with the recent move since the gap up. So it's actually AVGO. Broadcom. So give them some love. Unbelievable. We talked about the stock when it's 18, 19, 20 times earnings. Again, it is stretched here now. I believe last time I looked, it was like 36. So it's been a lot of valuation expansion here. 38 times now forward earnings. So, I mean, a little bit different story. It's stretched. I think Broadcom's a fantastic company. Would I buy it back at 180? Absolutely. Am I chasing it here? Probably not. I'm not buying anything today. I think we have a shopping list. I think we go shopping in mid-January when we get an eventual pullback. I think that happens. That's just my thoughts. I have no crystal ball. I wish I did. So I may be wrong. But I think we're going to get a January pullback, and I think it's going to give us a buying opportunity into some of these names, including Broadcom.
I don't have anything coming out at 8:30. So that's what JJ says. I don't know.
I don't know what numbers are 8:30 either.
Yeah, 8:30 Friday.
There's nothing major.
Yeah, I don't think so. And then
Burke.
I have
Burke. Warren's been lagging. He's been lagging here. He's the value guy, so we know when value, when we've got the Dow going down for 11 or 12 consecutive days, it isn't going to do a world of good for Burke here either. He's got a lot of value stocks, got a lot of Oxy, a lot of low value names. Those have been out of favor. Does that turn around in early January? Maybe. So maybe there's a Buffett trade actually. When you start seeing the growth roll over, Buffett will probably get hot again. So keep that in mind.
Okay. And then the next one I have is JP Morgan.
That's correct.
Okay.
JP Morgan, I'm long. I got long.
I thought you sold it. I thought you booted that.
No, I sold half. So it popped back up. It killed off on that day, and then it popped back, and I got nervous and sold half. So I kept half. I don't know. Valuation's fine. I think Trump administration helps it. So there's reasons to be long JP Morgan. I got shaken out of some of it. It happens.
I got this. The first time I ever bought it was when did we have that pandemonium? Was that in 23? With the regional banking crisis?
Yeah.
Yep. I figured they were going to be the only bank to survive. Got that.
Yeah, so that's doubled for you because it was like $120 back.
In a bank, Coal America came back for me. Although I think I might have bottom ticked a little bit of it, but still, Coal America. But okay, this was my daily chart. So let's go back to the daily.
Is that 10? 3, 4, 5, 6, 7, 8, 9, 10. JP Morgan, we're in a little further. And then Lilly. We should do Lilly, even though it's right there. It's like number 11.
Okay.
So
Okay.
we'll sneak in the top 11 just for Eli Lilly. And
Well,
Lily's
that's what
started
I
too.
do. That's what I do because two googs. I make two googs one. So there you go. Lily, oh man.
The
I
Ozempic
mean,
story is tired here too right now, folks. The story is tired. It's why I sold most of my VKTX Cup to small position in it. And I traded that poorly because I was way up in it and obviously should have sold it on that day, got up to 90 and just let a winner become a loser. Did terrible on that one. But, eating it at this point in time because the story is cold. And, a little bit with RFK. But the story's got cold here.
okay. All right. We covered Lily and that MVO news didn't help it the other day. It did. It gave it a temporary boost. But
And I
they
was
still
leaking it.
yeah, they still I mean, that was the story of 2024, right? What's gonna be Lalo G says Manjaro's coming back in January. So I don't know. I mean, that was the story.
The
That looks
story
like.
has the potential to get hot again. We're monitoring, but right now it's cold. So again, you got to be in hot stories. That's what's going.
But
Okay.
what's the difference though when it gets hot this time is something that we talk about. I mean, there's people at Lily are like, I didn't sell this at 850. I mean, what am I thinking? I didn't sell this at the
About
triple top
1,000.
on.
Almost got to 1,000.
I
How
know it
close
got
were
to
we to 1,000?
970.
972.
Ooh, you got a great number. Man, I wish I would have brought this up the other day. You got a great number on the monthlies here. 2 monthly high split in 847. That's a ways away. But you know what? If you're in this, Lily, and you're looking to get out and you're looking for like one of these ridiculous pops, maybe a 10-for-1 stock split and a buyback. And boom.
Well, there you go. They could announce a split. That's
That,
possible.
yep.
That's kind of stuff that actually could kickstart a stock again. So, a little bit financial engineering, as Joel says. That could be something that could kickstart the Lilly story again. Do I think the Lilly story can get hot again? Absolutely can. Right now, the pharma story and all that is just cold. Maybe it's going to take a calendar turn, to get it going again. But this was still one of the big winners here too. Not that big of a winner though. Like you think about how good of a year Lilly had at one point in time going. And the stock started the year
Yeah.
about 620 at 790. It was a good year for Lilly still, but not a great year. And it could have been a great year, but that last half, really cooled off.
Yeah, I mean, what about the driving going back to the value and stuff that everybody hates? I mean,
Well, the drug
I
stocks, healthcare is just completely out of favor right now. So what turns that around? If the growth gets the rug pull, they'll start to scramble back into this stuff. But what's also beating this up is Spinner's point, which we talk about every day, is the TLT. It just doesn't stop going down. They're not going to start buying these stocks that, have the dividend plays, the safety plays. They're going to start to keep staying away from this stuff because bonds are a good alternative to this stuff. So they're going to stay away from this stuff if the TLT continues to leak. The TLT leaking is a serious problem for this overall market. And it's just slow, steady decline. I mean, that's a problem for your small caps. That's a problem for your drug stocks. That's a problem for your biotech. That's a problem for your housing stocks. That's a problem for a lot of value names. The value rally will come when the TLT actually starts rallying. So keep an eye. It is your indicator. If you are a value guy, or a value girl, there is no point to coming in and buying these value names until you start to see a TLT rally. That is your indicator.
What's that song? It's not value. It's an old song. I'm trying to think. All right, I'll think about it during
You think
the.
about that in the background while we get Ryan Dietrich.
Yes.
So we were mixed today. We're kind of mixed. We don't know what to think about this.
We don't want to
market
talk
into
bears before
2025.
Ryan.
So I want to know what Ryan thinks because I'm mixed. I think we have a January rug pull, but does a rug pull get bought? I want to know what Ryan Dietrich thinks. Let's go get him.
Okay. All right. Yeah. Here we go. We got to give him an intro. Not the intro I wanted to use, but. All right. Coming to the stage from the Carson Group, the bull, Ryan Dietrich. How you doing?
Hey guys, good morning. Happy Friday here, last Friday of the year. It is Friday, right? Who knows what day it is? I don't even know anymore. But I'm honored to be back and looking forward to it. And just diving in, Dennis. I mean, you're talking about the yields there. I'll tell you, one of our worries is the dollar, right? A dollar is kind of the same as higher yields potentially, or well, you were talking lower TLT, so I guess
they go together.
They go together. They inverse, as we all know. But yeah, that dollar continued dollar strength is one thing that could really upset my bullish thesis that we do have. I got a bunch of charts, but that's
I want to see
what we've been talking about.
Before we go to the charts,
yep.
What would you say to the person that said nothing wrong with the strong dollar? Because that's just going to offset these tariffs. What do you say to that investor?
Yeah, it's you got to look a little closer because it's a good point. Yeah, you think to yourself, I guess I'd want to have a strong currency in a perfect world, because you look around the globe, Germany probably is going to go into a recession. China's, you're telling me there's a chance, to quote Lloyd Christmas in Christmas season. So the dollar strength is happening for that reason. We saw the hawkish cut. I'll kind of disagree about that, but it is what it is. A hawkish cut from the Fed. Other parts of the globe might be cutting, so that dollar strength is there. But the bottom line is a little bit of dollar strength is fine, right? I mean, I'm talking about like in the first 10 months of 22, we all remember this. Stocks did horribly, bonds did horribly. Dollar was super strong. So if you have a very, very strong dollar, that's when you have to worry. But a gently strong dollar, Joel, that's not the end of the world. So, but we have had an awfully strong dollar since the election, and that could be some election stuff. I get it. But going forward, if you see continued, 1% and 2% monthly moves on the dollar, that's a lot for a currency, as we all know. And that's what would be a worry of. We don't expect it. It won't be clear, but if it happens, that's a signal. That's a clue. I came on with you guys back in August. I remember had the yen carry trade unwind. Everything was going crazy. Everybody said the end of the world was near. We said, no, look at the dollar. The dollar actually went down during those couple days. It was a true calamity. We thought, the first Monday, Tuesday, Wednesday of August, we would have seen more dollar strength. So that's that clue that we have, and we're going to keep watching it. But we're not there yet. But again, it's something that's caught our attention for sure, Joel.
Okay. Look at that yen coming in too, huh? Remember that old yen carry trade? No big deal. Okay, so I'm gonna pull down my charts here, and you're a veteran, and if you get yours in the queue here, I can bring them up for you, and then Dennis and I are gonna get our notebooks out. And
I write everything down. Right?
Yeah,
so
I
rewatch it.
Here we go. So I'm sharing. Hopefully you see this. Does that look good?
Yep.
All right, I threw a bunch of stuff together. You know how I go. I go fast. I get excited. I was thinking, I've got a blog come out next week, and I'm a market strategist. I'm not a short-term trader. I know a lot of short-term traders on this call, but I wanted to think of like big picture things that you should think about every year, all the time. These are things I think we all need to realize and remember. So as you're going into a new year, here are some things to think about. I think it's important for just investors in general to expect a double-digit peak-to-trough correction. You know why? Because it happens a lot. The average year since 1980 sees a 14% peak-to-trough correction. This year, only 8.5%. Okay, last year would be 23. Remember that 10% correction into late October? Everybody just went haywire. We were saying, maybe it's just kind of normal. So just think about that if you go into the year expecting a peak-to-trough correction of 10% or more, you might be a little calmer when it actually happens. That's just the first thing there. Don't get worked up on politics. I probably shared this chart before with you, but this is red, this is blue, and you have people in the White House. Listen, policy matters. We're just talking about tariffs, right? I mean, talking about tariffs and the dollar and the Fed and all these things. Policy matters, yes. But again, to get all worked up over politics, that's fine. You want to do that, go do it. But separate your politics from your investments is something we've all stressed a lot. I know you guys have as well, and that's important. It's about time in the market, not timing the market. It's the lingo that people like I like to use. The longer your holding period, the more likely you are to be positive. Called the rule of Joe Montana. Montana, number 16, by the way. So every 16 years, the S&P 500 has been higher. Now, believe me, nobody wants to wait 16 years, especially people on this call. You want to make money a little sooner.
You want to wait 16 minutes.
Yeah, exactly. Every 16 minutes. But still, these are the important things to remember that as longer-term investors, people with their 401ks and things like that, those are things to remember. Now, this is a good one, I think. Valuations, do they matter? Yeah, I guess. But on a one-year basis, I just created this chart recently looking at forward S&P 500 earnings, then relative to what happened 1 year later, 12 months later. The R squared, we'll keep this kind of simple. The R squared is like 0, okay? So the R squared goes from -1 to +1. If you're at 0, everyone, there's virtually no correlation to whatever valuations are, what stocks do the next year. Now, you go 3 years, you got 5 years. Yeah, it changes a little bit. There's something there. But a year ago right now, everybody's talking about valuations overvalued. And it was. I'm not disagreeing, but my goodness. Hopefully you didn't listen to all those people on TV telling
going higher,
saying valuations matter. Yeah, individual stocks, maybe sectors, but broad base on the market, I don't think so. And that would suggest that. Always scary headlines. Every year's going to have them. This year had them. Next year's going to have them. Remember 2013? Was it Cyprus? Remember Cyprus, guys? Cyprus was going under, this little beautiful island in the middle of nowhere. And everyone freaked out 2 days back in 2013. All in the stock market gained 30%. Every single year has scary headlines. Let's not forget that. The last thing, average isn't so average. 9% your average year. Okay, that's fine. Only 4 times in history, back to 1950, has the S&P gained between 8 and 10%. So about an average year. Okay, you're more likely, and here's the why. This will be a bar bet or a fun Christmas Eve, New Year's Eve day, or New Year's Eve party trivia. 22, assuming this year's up 20%, which is pretty good for the S&P. I think we're safe to say. 22 times up 20%. 21 times down. There have been more 20% gains for the S&P than down years. Okay, so that is something I think a lot of us have trouble wrapping our heads around. But bigger outsized move. The average up year is like 19% for the S&P. The average down year is like 14%. It's rare, and all these strategists, my world, come out about a 10% gain. Well, if they're saying that, just know that that's the average. They're playing it to the vest, but the odds are a bigger move. So those are some big things. Volatility is a toll we pay. This is a cool one. People like this one. Just how many times a year you see a 3% pullback, a mild pullback, a 5% or a 10%. Bear markets happen every couple of years. This is on average, because some years see more 10% corrections, 2 or 3. Some years don't see any. But again, just some important things to remember. Now let's get more to the fun stuff. Here's Santa fighting a bear, because it's Santa fighting a bear. Whatever. It's that time. So the Santa Claus rally. When you have a good first day, everybody knows Santa Claus rally. All right.
Yeah.
7 days, up 78% of the time. Higher like the past 8 years, and down last year. Higher the past 8 years. Santa Claus comes to town. Usually these 7 days that we're in now until I think next Friday are usually pretty strong. That's fine. When the day one is up 1% or more, like we were on Christmas Eve, again, it is what it is. The full time was never lower. Not a shock. You got a big day out of the 7 to start it off. You never lower at 3.3%. But check out the final 6 days there, okay? Continued strength up 1.7%. So we're not saying don't give up on Santa yet, is where we are. But the bottom line on this, and Mr. Hirsch has talked about this, all my traders, when Santa doesn't come to town. Now, let's be clear. Last year, Santa didn't come. Stocks were down during these 7 days. And then what happened? Everything was great. But look at the previous 5 times. January was lower when Santa didn't come to town. You've got 2000, you've got 2008. Maybe just little clues, little cracks, little things that if it's bullish, when it should be bullish coming into this period. How many stocks were beneath the 10-day moving average? 20. And we were in flush out. We were in washout material. The VIX spiked, obviously, on the Fed day 2 Wednesdays ago. We expect to see a bounce here. We are, so that's a good thing. If we sell off, though, then that's maybe a warning. Then just very simply, if you're positive during the Santa Claus rally, that next year's up 10%, over 10% of the time. If you don't have Santa, you see you're up about half that, 5%. So, yeah, there's some things. Now, a couple other big picture things that we can talk. I think I've shared this before. I think it's a really powerful chart. I got alarms and stuff going on upstairs. I don't know what's going on. We had a sleepover. My wife's little kids. I think one of them just opened the door or something. I don't know what's going on up there. All right,
do you want to go check? I mean, an alarm can't
be a fire alarm.
I don't know. No, the dog's barking. Everything. It's going haywire up there. I think the garbage. You know what it is? The garbage man. My big dog absolutely loves the garbage man. The dog garbage, and I think the dog whose garbage is a day late. So I think the garbage man's here. My big dog's going nuts. Someone opened the door and the alarm went off. But hey, that's such is live stuff. Anyway, all right. So bull markets. When you get into the third year, like this bull market, it's rare to end. Doesn't mean the third year is going to 20%. We don't think it's going to 20% this year. We'll be clear. But the average, when you look at all these bull markets that made it this far, is 8 years. All right. I mean, so it's like a cruise ship. Once these things get moving, they keep moving. You can have some extreme event, a 100-year pandemic, a major financial crisis, which we don't see. Something could come out and get us, and that could end the bull market. That might be what it takes if you're going to end the bull market this soon once you get to this point. So just some important context there. When you're up 20% 2 years in a row, like we're probably going to be that next year, how's it do? Well, higher 6 out of 8 times, 75% of the time, not too bad, actually a little bit better than average. And about, what is it, a 12% average, 13% median. I mean, hey, I think, as a market strategist, I would take that, and that's not too far off. We think, we've got a range about 15%. We think 15% makes sense next year for the S&P, but again, we're probably going to see a 10% peak to trough correction at some point. We do see more dispersion coming in. We can get into that in the Q&A. But anyway, so just be aware, up 20% 2 years in a row is not really bearish when you look at history. I think this might be second to last one. Don't shoot the messenger. Listen, I get it. No one likes inflation. Inflation since pre-COVID, I confused a couple of words there, is like 19%. That's PCE, but check out wages, check out employee compensation. I know this sometimes upsets people when we talk like this, but this is why we haven't seen a recession. This is the things we were sharing for the past year and a half, saying, listen, people are making more money than inflation. It is what it is. That is probably a strong thing. The consumer is still strong, that we're still creating 100,000, 200,000 jobs every single month on average, the last 6 months, the last 1 year. Things are still solid. Are they slowing down? Yes. Are there some cracks out there? Yes. This late into an economic cycle, this late into a bull market, you're going to see that. But the reality is, again, wages are still pretty darn strong. And to us, inflation, I know we had that inflation data. Everybody freaked out a little bit. Inflation is two things. If you look at CPI, shelter and auto insurance. Okay. If you take those two things out, everything else is negative. Okay. So it is what it is. Okay. I mean, we just don't think inflation's is major worry, and we'll see going forward. And then I think this last one, productivity is the key. I've talked about this concept before. Our country is seeing very strong productivity 6 quarters in a row. I think it's, what is it here? 2.8, I think, 2.8% the last 6 quarters. All right. That is like the highest we've seen since the mid to late 90s. What in the world does higher productivity mean? When you have high productivity like we have now, you can pay higher wages. You put a cap on inflation. And oh, by the way, the Fed can cut interest rates. Sounds like a perfect scenario. That's what we saw in the mid to late 90s. This is a theme we've been talking about for well over a year. Why, again, we think a couple rate cuts can happen. You can pay higher wages, and you don't have to worry about higher inflation because the higher productivity kind of eats into that inflation. So it's a perfect scenario, yes, but that's where we are, and that's why we've been pretty optimistic. The F word, we'll finish with this. The F word, the Fed. When the Fed cuts within 2% all-time high, like they've done twice this year, 1 year later, S&P's never been lower. 20 out of 20. Lots of stuff to factor in, lots of other stuff to look at, but I still think this is a don't fight the Fed market. I know the market says 1 cut. The Fed says 2 cuts next year. We're thinking more like 2 or 3, again, once we see some better inflation data, and that's not a ton. I mean, is anyone really changing their whole thesis because the Fed's going to cut 2 times versus 4? I don't think so, but it's the market's freaking out, and the stuff that Joel, Dennis, you were talking about earlier with yields and things like that. We do expect better inflation data to suggest, again, that these cuts are still cuts coming, but cutting near all-time highs is always, not always, but usually a positive thing. All right. 19 slides. Hope I didn't talk too fast. I even had a fire alarm and a dog going crazy in the middle of it. But fantastic. There we go, guys. What do you think?
I think I'm with you. I think we get an early maybe pullback. I don't know if it's going to be 10% or not, but an early pullback. And I think that pullback, as I was saying, probably gets bought because there's still a lot of reasons to think, that people aren't just going to throw stocks out here. I mean, anything can happen, like you said. There can be some macro catalyst that changes everything. But with the information we currently have, I like the Ryan thesis. Maybe an early pullback, maybe it's not January, maybe it's in there somewhere. But that pullback probably gets bought. I love seeing the stats. This is why we got the stat man to bring us and say, hey, it's been a crazy 2 years. We're up 25%, we're up 50, 60% a couple of years. Yeah. It's got to peter out. Well, your stats are showing specifically that it typically doesn't. It typically continues. So that makes me want to buy the dip more when we get that inevitable dip.
One thing on that, I should know the number. I think it's 57 all-time highs this year on the S&P. Close enough for government work. We haven't had one in like 2 weeks, which is just terrible. I don't know if that's legal. But anyway, we've had a lot of all-time highs this year. The 2 previous calendar years, people kind of forget this, we had a total of 1. In 22 and 23, 1 all-time high, the first day of 22. We had that bear market in 22. I mean, listen, 23 and 24 have been great. 23 just made up for 22. I mean, that's the honest truth.
True.
And now we're to the upside. And again, that's just important to have that context around as well. That, we've had a lot of new highs, but hey, that's the last 3 years. We've had 58 all-time highs. That's not that many. The average at any time 3 years sees 55 all-time highs. I'm throwing a lot of numbers out. I'm just putting in context. These last 3 years, it's not that crazy because we had a bear market at the start of it. So it's just kind of even it out is how I see things.
Ryan, how much of your thesis would be denigrated by no interest rate cuts.
Here's the thing. I guess you could say some of it. I don't think we gained 15% because I think you probably need a couple interest rate cuts. But what's so unique about it to us, if the Fed starts to hike, yes, that would be a problem. If inflation starts to rear its ugly head, if tariffs truly cause massive inflation, which I don't know. I mean, just look at the data back in 2018, 2019. It's not like we were seeing massive inflation. Inflation was around like 2.2, 2.3% those 2 years. That wasn't terrible. But I will say this, why are we seeing less cuts? And what did the Fed really say when we listen to it? I mean, the economy's strong. It's like if the Fed were to cut 6 times next year, would that be good? Or would that be bad? I don't know. Is it so bad that it's good? It probably means the economy is really, really slowing down. I mean, the United States saw a good chart in Bloomberg that the U.S. to S&P minus the rest of the globe minus the S&P 500. So simply U.S. relative to the rest of the world. This is like the best year we've ever seen, okay? And we've had a string of this, and, maybe next year's a little bit better performance around the globe. I don't know. We're still overweight U.S. We got overweight U.S. for the 2 years I've been at Carson Group. So the reality is, listen, I guess the fact that we're still growing faster than everybody else for the most part, this could be the second year in a row, the U.S. grew faster than China. We grew faster than China last year. We might do it this year. We'll see what the final numbers do. I mean, that's amazing. And then when you layer on that productivity stuff there, Joel, those are positives that, hey, if you don't cut as much, it still probably means you have a strong economy. Because, again, with stronger productivity, and when you really dig into the inflation data, I don't do that. I work with a really smart guy named Sonu Varghese, and a lot of people probably follow Sonu. He does amazing work. He really digs in, and he's like, listen, this inflation stuff, it's there, but it's really not the worry that people keep making it sound like. Our personal big worry is the Fed gets a little freaked out with some of the inflation data because of pressure from new policy, new Washington leadership, new president. But we saw that last year. Let's not forget what happened last year. We saw a little pop in inflation, and a lot of that was just because of some weird quirks. Okay, I work at financial services. I know a lot of financial services people watch this show. One of the biggest reasons that core PCE is running above 2% year over year, it's because of shelter. And the other thing is people are paying their financial advisor more money in financial services fees. Why is that? Because the stock market's up 70% the last 2 years. I'm not saying we love it, but hey, I think a lot of us are like, that's not the end of the world, but will that one go low? That's like causing 20 basis points of excess inflation year over year, just because people are paying their financial advisor more money because the fees are higher because the stock market's up a lot. Is that bad? Is that good? I don't know. I think most people will be okay paying that one.
All right, so you said that things are because of the autos and the shelter, right?
Yeah.
Primarily, and that's what. But I am just astounded here. Pop Bellies, PBPB,
good milkshake. Yeah.
Okay. I went there yesterday. I had to run an errand. Okay. I got my usual sandwich. Got a little extra on it. I got some light chips and a pop. Do you know how much that cost me? Dennis, how much you think that cost me?
Probably $16.
18, given the way this conversation's going, but
$18.
That's Brian's spot on.
Here we go. I've been
the problem is,
I got the same thing the other day.
You know what the problem is, though, is that when you don't have an inflation, it's not like prices are going down. So we already had the price hikes, and they're just here to stay forever. Prices don't go down.
Right.
So, I mean, people are like, okay, well, inflation's back. It's only down to up 2%. Well, why am I still paying this much money? Because people confuse deflation with, prices not going up as much, disinflation. They confuse those terms. So, I mean, prices are still going higher from where we had. So we went COVID bump, and then we just keep ticking higher, higher, higher. So that's the thing, is the prices are still here to stay. But the U.S. consumer, to Ryan's point, has been very resilient. They're still going places. They're still doing things. They're still spending that, money. And again, I've said the difference, is because the interest rates didn't hit the U.S. as much because everybody's got the 30-year fixed. That's the big difference. You look at Canada, the Bank of Canada, what they've done since June. And June 5th, they lowered by 25 basis points. July 24th, they lowered by 25. September 4th, they lowered by 25. October 23rd, they lowered by 50. December 11th, they lowered by 50. 5 rate cuts. And why? Because Canada's in a completely different situation. They only give 5-year fixed max. So everybody now, because we started raising rates 2020, 2021, or 2022, So now all those people who were sitting, in variables got hit right away. But the people who were in 5-year fixed maybe had 3 years left, 2 years left. Those are coming due. And every time one of those comes due, somebody has less disposable income because the rates have gone higher. So that's the difference. The U.S. has been resilient, I believe 100% because of the 30-year fixed mortgages. That's why the U.S. has been so resilient. And that's great for the U.S. consumer. So, I mean, you're sitting here, if you're the Fed and you're looking at Powell and you're saying the stock market at all-time highs, and you think about Alan Greenspan with his irrational exuberance comments going back, obviously to, when, I was, even before trading, in the 90s, I mean, he doesn't want that to happen either. So if the U.S. consumer is resilient, why, go crazy with lowering rates here? But to Ryan's point, maybe the stock market still stays strong regardless of that.
Two things here.
Best sectors for.
He said two things. Ryan wanted to.
I'll make it quick. Greenspan did that on December 13th, 96. The S&P gained 115% the next several years. NASDAQ, I think 400% or 500% after the irrational exuberance speech. So let's think of that. And then disposable income. That's a great point. Disposable income has been growing incredibly fast in the United States. If you look at disposable income relative to debt and various things, we're actually lower than pre-COVID, right? I mean, I know there's more debt out there. We all understand more debt out there. A lot of that is government debt. Look at corporate balance sheets. Look at consumers. They've got a lot of debt, yes, but they have a lot of equity. So anyway, I know I've talked about this. We've talked about it, but that's why U.S. is so strong. But yeah, sectors, not too different than what we've said this year. We like the cyclicals. We have liked, financials and industrials a lot. Those have been our largest overweights. We have a slight overweight to mid caps. We are relatively on trend as it comes to small caps, but people think we're crazy to say that. But listen, we manage money. All right, we look at diversified portfolios. We think it makes sense to have a little small cap, have a little mid cap exposure, because they are historically cheap. And I know I said valuations don't really matter in the short term, but if historically when the Fed starts cutting, you start to see some alpha. We had a 10% rally in the S&P. I'm sorry, the wrong one. In the Russell 2 in November. I know December's been a little sloppy for small caps, but you look what happens after 10% monthly returns on the Russell 2. 6 months later, higher 90% of the time with really, really strong returns. So we're not ready to give up on small and mid caps here. But again, the small mid cap cyclical theme are the places we are. We've been underweight, the defensive stuff, utilities and staples and energy. And those have obviously really, healthcare too. I mean, those have really done poorly. So fortunately, we've done pretty well with the money we run just because we've been underweight some of the stuff that's lagged. But overall, we'd stick with kind of what's been working. We still like those areas with deregulation coming and no recession. Cyclicals, small and mid are some areas we think will do pretty good into 2025.
Okay, Ryan. So let's get to the important stuff. Okay.
Yes, let's do it.
Oregon, Ohio State.
Yeah.
So, I mean, I don't want to do it. I don't want to do a plant the flag thing because I don't want to, that wasn't very.
Bowl. So no one's going to be planting flags in the Rose Bowl, I guess, but yeah.
Yeah. So Ohio State, I almost feel like if I would have coached Ohio State against Michigan, they would have blown them out.
Oh,
I mean, I don't understand what his strategy was running at the guy that's probably going to be number 2 pick in the draft and not throwing to Jeremiah Smith, but running them outside. What do you think? I mean, Ohio State's favorite. They're ranked.
Ohio State's favored to win the whole thing actually right now.
Yeah.
So yeah, it's Oregon, Ohio State, Texas, all on that one side. So the truth is, they have a good roster. Ryan Day has a Michigan problem. I mean, he heard all year, not tough enough. So what do you want to do? He wanted to prove they were tough enough, not just win the game instead of, again, not running right at the best 2D tackles they were going to play all year and stretch the field and throw to your wide receivers. So the one thing, Ohio State, they lost to Oregon by 1. Very, very close game. Ohio State's defense has given up 0 passing touchdowns since Oregon. They played Oregon in the middle of October. Their defense is legit, but hey, if Ryan Day does something stupid and runs the ball up the middle every time, you're not going to win. The one thing, though, that they've really kind of mixed up since that Oregon game is their defense is creating a lot more sacks now. They are doing some unique things. So anyway, they're playing well. I mean, that Tennessee game was nice. The invasion didn't go as planned. So of course I'm a homer, but Oregon's legit, obviously number 1 team. But Ohio State, they are playing pretty good football as long as they don't play Michigan. They look pretty good. So hopefully they do it. We'll see. Yeah.
All right. Good luck there. All right.
Thank you.
You guys know him. He's Ryan Dietrich. He's the chief market strategist at the Carson Group. We'll be dialing you up in January. Thanks for the extended coverage.
See you guys.
Awesome. Thanks, Ryan.
Where are we at, Triple D? We we're a little bit weak here. Do you feel
You
that
know what happens? They just can't help themselves. They get a little follow throughout the open, shake people out, and then by 11 o'clock, the algos start buying in the afternoon, and then we end up almost going green or going green by the end of the day. I mean, the song remains the same for 3 more days. I think the song changes in January, but we're not in January yet. We're on December 27th. It's hard to come in here and say, I'm going to sell us 25 points down. This is the start of the big correction. I think you're early. I think you're a couple days early, just like yesterday. What did we do yesterday? We were down when we started, end up closing green. I mean, they come in, algos can't help themselves. They just start buying. So the buy the dip algos are still running. There's no institutional money managers even at the desk. We're being driven by retail and we're being driven by momentum algos. That's the next 3 days until they come back to their desk after they're all with their families. Only me and you here working and a few of our chat. Our chat's awesome. But that's it. People are off right now. So what changes, when that happens? Not that much. So song remains the same for today. Song remains the same, I believe, for Monday. Maybe Tuesday, people start to get a little bit more nervous coming into the change of the year. But I think song remains the same. Dip probably gets bought today.
Well, Dennis, our chat is the institutional traders on Wall Street.
There's probably a couple, but the traders that are institutional traders in our chat are probably not in the chat today.
If you are,
there's a few. Who's an institutional trader in that chat? Who's trading other people's money?
Yeah,
who's trading their own money? I'm trading my own money.
Yeah, I don't think anybody's going to tell us that. But anyways, let's wrap it up today, Dennis. I will say that you're right on your buy the dip thesis. As long as we hold yesterday's low. And, I'm not just talking about taking it, I'm talking about an early breach of yesterday's low, which is pretty darn close. And if you do breach that early in the session, I think you get a little bit more of a sell-off anticipated, and then the algos will come in. I don't think they're ready. I don't think they're planned to buy at yesterday's low for the dip today. I think they're going to, because that's what happened yesterday. Nothing ever happens the same. So let's see what happens.
It all happens the same. The damn year has been the same. Buy the dip wins. How many days do you come in and buy the dip wins again? How many days? So many.
105 out of 100.
Yeah, 105. Okay. Buy the dip is probably the best eternal strategy that's ever existed in the stock market. Because the stock market's at all-time high, so all the buy the dip winners have won. And not on all individual stocks. Obviously there's been some bad stories out there, but overall, buying the dip on your major companies and your indices over time has just worked. To Ryan's point, longer in the market, the better off you are. It's all true. All that stuff is true.
Okay.
I don't know. So let's just finish up in 2 minutes. Final thoughts. We finish up the week. I think we're early to be this full on. It's a pretty weak market here. Tesla's down $5. I mean, I think Tesla's, in a cooling period. I think it needs to go into a cooling period. But headline driven stock, be lots of headlines next year. I think to Ryan's point, I just taking Ryan's presentation and applying it to my own trading. I think we get an early pullback in January. And I think eventually come in mid-January or whatever in the stock, they just start buying again, much like 2023 or 2024. We started the year kind of weak, and then they just started buying mid-January, and they never stopped all year. I mean, maybe we do it again.
Okay. All right. I'm just going to play the cards like as things happen today. And I think the scenario, I mean, I'm still, what day do we have the crazy rally? Was that, what day with the Goolsby rally? What was that, 3 days ago? What was that? You had the big down. Yeah, you had the big down day, and then you had Goolsby. So
bail the market out.
Yeah, I think it's really important to hold these gains, to hold up here, to establish a bid at this elevated level. Don't know if we're going to go back down and test the low of the move, but it just feels like it's easier to identify resistance in the market. Like I know where I would want to sell. I know where I'd want to get short. I know where but like where the good support is, it's yet to be determined. So great show. Thanks to Ryan Dietrich, Chief Market Strategist at the Carson Group. Thanks to the chat, everybody. Get ready. Let's have a fun weekend and then get back for another shortened trading week. We figured we'd follow one bull up with another. We'll bring Ivan Feinsack from Tigris Financial Group on Monday's show. Everybody, hope you enjoyed Pre-Market Prep.